Good afternoon, ladies and gentlemen, and welcome to the Clearwater Seafoods Incorporated Investor Call conference call. At this time, all lines are in listen-only mode. Following the presentation, we will conduct a question-and-answer session. If at any time during this call you require immediate assistance, please press star 0 for the operator. This call is being recorded on Tuesday, August 11th, 2020. I would now like to turn the conference over to John Lane. Please go ahead.
Thank you, Veronica, and hello everyone, and welcome to Clearwater's Q2 2020 earnings call. As we begin, I'd like to recognize that we are in Bedford, Nova Scotia, in Mi'kmaq, the ancestral and unceded territory of the Mi'kmaq, who have been living on these lands since time immemorial. And this recognition is a small but meaningful step in reconciliation and the continued efforts to build a strong nation-to-nation relationship. As Veronica noted, my name is John Lane, the company's treasurer, and with me are Ian Smith, Chief Executive Officer, Teresa Fortney, Chief Financial Officer, Christine Penny, Vice President, Sustainability and Public Affairs, and Donald McNeil, Assistant Treasurer. This call is intended to provide information to Clearwater investors. We have also scheduled a media call at 3:30 Atlantic time, and we will be delighted to take questions from media at that time. Earlier today, we issued a news release that provided the full details of our second quarter results. For the purpose of this call, we have assumed that participants have reviewed this information, which is also located on our website at www.clearwater.ca. Therefore, during this call, we will focus on the more significant points from this release. Please note that during today's call, management may make forward-looking statements. All statements, other than statements of historical facts, including, without limitation, statements regarding future plans and objectives of Clearwater, constitute forward-looking information that involves various known and unknown risks, uncertainties, and other factors outside of management's control. Forward-looking information is based on a number of factors and assumptions used to develop such information, but which may prove to be incorrect. Forward-looking statements may include, but are not limited to, total allowable cash levels, selling prices, weather, exchange rates, fuel, and other input costs. There can be no assurance that such information will prove to be accurate, and actual results and future events could differ materially from those anticipated in such forward-looking statements. For more information on risk factors applicable to Clearwater, please refer to Clearwater's continuous disclosure materials filed from time to time with securities regulators, including, but not limited to, Clearwater's annual reports, quarterly reports, and annual information form. Finally, the forward-looking information included in this call is made as of the date of this call, and Clearwater does not undertake to update publicly or revise forward-looking information, whether as a result of new information, future events, or otherwise, except as required by applicable securities laws. I will now turn the call over to our CEO, Ian Smith, for an opening statement. Ian?
Hi, everyone. Good afternoon, and thank you for joining us. I'd like to begin by recognizing that we are all truly proud and grateful to our Clearwater employees. They are leading with courage, integrity, responsibility, and with their hearts. They continue to protect themselves, their coworkers, and families, and work tirelessly to support a safe and reliable global food supply chain under what we all know are extraordinary conditions. 2020 began with great business momentum and promise, like we came out of 2019. However, the impact of the pandemic on the first half of 2020 has been significant and complex for our customers, our supply chain partners, our company, and our employees. The impact of COVID-19 expanded globally in the second quarter to impact all sales regions and most of our species. And the measures that we quickly implemented in the first quarter of 2020 have been successful in protecting the health and safety of our employees. We've managed harvesting, processing, and procurement to align with consumer demand, strengthening our ability to remain in continuous operation at sea, on land, and around the globe. Our customer relationships remain very strong and continue to provide critical insight into understanding regional markets and have facilitated specific COVID-19 responses tailored to these markets. I'm pleased to tell you that demand improved in the latter part of the second quarter, and particularly in the month of June, and is expected to improve further as governments relax measures and markets continue to reopen. We have responded by placing extra focus and attention on the expansion of global distribution, new products and formats, and increasing promotional activity in channels that are experiencing heightened demand, including retail and e-commerce. We also continue to prepare for and are already seeing global recovery in food service channels. Clearwater's access to capital and our liquidity position remains strong. Adjustments to reduce spending and capital expenditures and operational changes to inventory and procurement plans, as well as temporary changes to our dividend policy and access, as well as access to government support programs, have all helped to preserve cash and leave us in a confident position through the balance of 2020. We have taken these necessary steps to be well positioned as we move into the second half of the year and believe that we're, again, well positioned to weather current economic conditions and take advantage of future growth opportunities as global seafood demand continues to recover. I'll now turn it over to our Chief Financial Officer, Teresa Fortney, to give you more detail.
Thanks very much, Ian. Good afternoon, everyone, and thanks again also for joining us. So our second quarter sales and our adjusted EBITDA were $106 million and $18.9 million respectively, and that compared to $153.9 million and $30.3 million in the prior year due to the global impact of COVID-19. Year-to-date sales and adjusted EBITDA were $206.3 million and $32 million respectively, compared to $274 and $50.3 million in the prior year. Gross margin and adjusted EBITDA as a percentage of sales were 17.4% and 17.9% respectively in the second quarter, and that compared to 20.5% and 19.7% in 2019. Leverage increased modestly to 5.3 times compared to 5.2 times in the second quarter of 2019. The company is continuing to advance the strategic review process with its financial advisors to identify, review, and evaluate a broad range of potential strategic alternatives available to it with a view to continuing to enhance shareholder value. No timeline for this process completion has been currently defined. Sales volumes decreased across most species and regions in the first half due to lower demand in food service, partially offset by traditional retail and e-commerce demand, which continues to thrive in this difficult market. In the quarter, lower demand for clam, lobster, and langoustine and higher costs related to COVID-19 were partially offset by lower harvesting costs for scallops and clam, lower fuel costs, continuous improvement program savings, and refined procurement strategies and government support programs. Cash used in operations was $6.9 million in the second quarter of 2020, as compared to $35.6 million in the same period of 2019. Free cash outflow was $18.8 million, as compared to $48 million in the second quarter of 2019. And that was due to lower investments in working capital, and partially offset by lower cash earnings and higher capital expenditures. Rigorous cash preservation measures were implemented during the first half of the year, including operational adjustments to several species that significantly improved cash flows while having minimal impact on species profitability. Clearwater will continue to use cash preservation measures into the second half of the year to manage leverage and liquidity. we expect to generate positive free cash flow in fiscal 2020. Leverage at the end of the second quarter at 5.3 times compared to 5.2 for the same period in 2019. And the impact of lower demand from COVID-19 was largely offset by disciplined working capital management and strong 2019 results included in the trailing 12-month calculation, which overall resulted in lower net debt balances. Leverage is expected to increase in the third quarter as our normal seasonal cycle and as a direct impact from COVID-19. With a global economic recovery in the second half of 2020, we could see leverage decrease by the end of the year from current levels. The company's ability to operate safely and continuously throughout the pandemic has helped us to support the financial well-being of our employees, supported hundreds of workers in the fisheries sector and their communities, and has ensured the availability and delivery of safe and nutritious seafood to our customers, locally, nationally, and internationally. While the short-term impact of COVID-19 has introduced additional forward-looking uncertainty, Clearwater, as a vertically integrated seafood company with proprietary licenses, advanced in year-round harvesting and processing capabilities, our premium product quality, the diversity of our species, our global sales and distribution footprint, and an experienced and dedicated workforce has positioned Clearwater to take advantage of future growth opportunities as global seafood demand continues to recover. We are now ready to take questions.
Thank you very much. So, ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press the star followed by 1 on your touch-tone phone. You will hear a 3-tone prompt acknowledging your request, and your questions will be polled in the order that they are received. Should you wish to decline from the polling process, please press the star followed by 2. If you're using a speakerphone, please lift the handset before pressing any keys. One moment, please, for your first question. Your first question comes from George Doumet from Scotiabank. Please go ahead.
Yeah, good afternoon, guys.
Hi, George.
Hey, on the China sales, I think they're down close to 50% in the quarter. I know this is a hard question to answer, but what did the impact of the salmon COVID outbreak and maybe restrictions around seafood generally play in that role? And can you maybe tell us where that China sales number is trending in today, or I guess closer to early August?
Yeah, I think it's clearly hard to say what the future's going to look like in China, but I can tell you that like in the rest of the world, our demand in China continues to improve. There are no known cases of contamination of COVID-19 via contaminated food or water. And based on the current scientific knowledge of COVID-19, it's considered unlikely that infection from food or water can occur. Seafood, like any other surface, may potentially become contaminated if adequate food handling and sanitation measures are not in place or when handled by an infected person. Additionally, media attributions of a local outbreak to seafood sources, as I think you're alluding to, could adversely affect demand for products in the seafood industry, and government control measures everywhere, including China, continue to evolve. We continue to take effective action in this area around securing the health of our employees and making sure that our products are safe. It's what we do every day. Again, like other markets, China's been traditionally skewed towards food service, so it's had a deeper impact. I would say, interestingly, the rest of Asia has held up pretty well. and we see demand continuing to improve, and we see that in our current order patterns as well, not just in China, but in many other countries around the world.
Okay. And maybe a question for Teresa. I think you guys reported $5 million of wage subsidies in the first half. Do you expect to report a similar level in the second half?
So, great question, George, and we are expecting that we're going to qualify for some wage subsidies. With the change in the program that was announced by the government just several weeks back, they've changed the process now to be a sliding scale relative to your sales, so it's a little bit hard to say what we'll be eligible for until we actually see how our monthly revenues flow.
Okay. Ian, what impact, I guess, did the pandemic have on the strategic review?
None.
Fair enough.
I'll qualify that by saying it's taking longer to do things that we would normally be doing in person, just because of restrictions on in-person meetings and travel and so on. So I'd say that.
Have those constraints subsided a lot?
Well, we're still in an Atlantic bubble, and nobody can travel here without self-isolating for 14 days before they see anyone.
Just a quick clarification for Teresa. I think you mentioned that free cash flow is expected to be positive. I think last quarter you might have alluded that free cash flow this year is going to be higher than last year. Is it just positive, or do you still expect to have free cash flows generation above 2019 levels this year?
I haven't got the 2019 number for the year sitting in front of me, George. We're expecting it to be stronger than what we were forecasting at the end of the last quarter. So I'd have to look up and reference prior year, but it's going to be solid for this year.
Okay. Thanks for answering, guys. Good luck.
Thanks, George.
Thank you very much. Your next question comes from Brian Hunt with Wells Fargo. Please go ahead.
Good afternoon.
Hi, Brian.
I was wondering, how are you doing? I know you're a golf fan, Ian, but hopefully you're a baseball fan as well. And so I'm going to preface this by saying, if I was part of the Toronto Blue Jays organization, what inning would we be in if your strategic review were playing the Blue Jays?
Oh, I'll be. Yeah, that's a great way to try to get at a better answer than I can give you, Brian. What I can tell you is that the process is continuing in earnest, despite the delays and the impacts of COVID-19, but I can't comment on a timeline for its completion.
Okay. I was wondering if you could talk about, there's obviously this decided pivot around the world to food at home from dining out, and I was wondering if you can talk about how your organization, pivoted to more retail product, whether it's in innovation and in total volume of sales, and what cost impact, whether it's operating cost and or capital cost impact, has that had, in the most recent quarter?
Right. So I'll begin at the end of your question. So I would say that the cost impact has been nominal, right? So if we look at the first half of the year, I would say on a price per pound impact of our shifting that's been going on, it's in the single digits. And as demand has improved since the end of April, demand has improved, sales have improved, and prices have improved. So prices were modestly affected, but they're not being affected now despite the heightened demand in non-food service channels, which continues to grow. We tend to have more premium priced shellfish items, but the types. The best way to try to explain it to you, there's all kinds of different ways to get into, and I'll focus on retail for a moment. So first of all, we have a number of customers that we deal with directly, and we've simply been increasing sales to them. We've essentially not sold all that we could potentially sell to those retailers because we have constrained volume relative to sustainability, so we like to spread it around. Well, there's fewer places to spread it, and so we've been doing more business with some of our key Canadian and North American retail customers directly. That's number one. Number two is we have a number of food service distributors, both in North America and Asia and in Europe, that are multi-channel distributors. And they are shifting as well. So our ability to get our products into retail is enhanced by having really good distributors who have strong exposure to retail channels, and they're making the pivot for us. We also have distributors and customers who are on the processing side who have made their own pivots to retail and are making more value-added products. And then there's the things that we're doing on our own. So, for example, we're packing products for retail customers that are going straight to frozen or chilled, or i.e. fresh section. So if the seafood counter is closed in a Publix store, you can still find our products. And by the way, their seafood counters are back open. But back in April, if they were closed, you could find Clearwater scallops in the chilled section, so non-frozen. You could always find them in the frozen section, but if the counter wasn't open, you could find them in one of the coolers in the seafood section of the perimeter of the store, chilled in a grab-and-go package. We've also, mostly through customers who are doing value-added processing, done more retail-friendly packs, and those packs have been for their e-commerce business as well as for retail, more kind of single-serve, double-serve, grab-and-go. We've had new listings with the online stores for all the major retail players, and we've also expanded distribution with players like Ocado in the UK. So that's essentially how we moved, and the impact of packaging and additional costs relative to the cost of the product itself has been nominal.
So just two quick questions, and I'll be done. You talked about retail and e-com has been your focus. Can you tell us what your retail sales and your e-com sales were up year over year in Q2?
So it's hard to say because we're direct and indirect, and we can't give you with precision. We don't release with precision, or we don't release what we're selling directly to individual major retail customers, and our multi-channel distributors. It's really hard for us to pin down what's going into retail, which is versus e-com versus food service, right? But we do know that our retail, so anecdotally, I could tell you that our retail sales are up pretty consistent with how far retail is up if you take the North American market. So our retail sales anecdotally would be up in the 30 to 40% range versus prior year.
Great. And then my last question, Teresa, last time we spoke, you all had reduced guidance for CapEx down to the 30 to 34 million range. Has that changed at all?
Nope, that's consistent with where we are, continuing to forecast. We've removed our discretionary spending, but that 30 to 35 million is going to continue to give us what we need to stay fully operational and efficient in the fleet and in our facilities, and has some accretive strategic projects still included in there as well.
Very good. Stay healthy and best of luck. Thank you.
Thanks so much, Brian.
Thank you very much. Your next question comes from Doug Cooper from Beacon Securities. Please go ahead.
Hi, guys. First of all, Teresa, can you just walk through how you accounted for the $5 million of wage subsidies? How did that flow through the income statement?
So interesting question, and it's you rebroke it down and had to have a look at what was the support for the government wage subsidy. So to the extent that, and we would have qualified for wage subsidies related to all of our Canadian employees, and so many of those employees are in our operations, in the fleet operations, in the land-based operations, and so any of the wage subsidies received for that would have been capitalized and included into inventory and is released as that product is sold. And then any wage subsidies that were associated with salaried folks who would be in flowing through to, let's say, SG&A, the cost would have been realized in the period in which they worked.
Okay,
so it's kind of, there's not an easy formula to go there.
Yeah, I guess I'm just trying to get at was it the call it $16 million in shareholder EBITDA, or was that include the $5.1 million? Is that included in that, or and if it was, is there any offsets? Was there one-time costs associated with COVID that you had to undertake in the quarter, whether it's for screens or PPE or anything else, increased wages to get people to come, that kind of stuff?
So for the total first half of the year, we have incremental costs associated with COVID of $5.7 million, and we would have had that $5.8 million, and we would have had wage subsidies in our P&L that would have offset $5.1 million of that. So first half of the year, we would be tracking $0.7 million less on subsidies than costs.
Okay. And do you expect some of those, I don't know if we can call them one-time costs anymore, this might be the new way of life, but to continue, or, in the plant or the ships, putting plexiglass up or whatever, maybe it keeps the workers safe, is all that sort of done? Do you expect any ongoing costs in terms of PPE or anything like that?
So I'll answer that in two parts. So all of the right things that we've been doing in the vessels and in the we're continuously looking at making sure we can even do further enhancements for the safety of our employees. Having said that, we're also forecasting that the costs associated with it are certainly, the large part are over, but there are still some costs that are continuing for the year. Got to remember that those costs in the plants and the fleet will cycle through inventory and then come out as we sell product. But a good chunk of costs, we had incremental costs as an example where inventory values would have been impacted in the first quarter based on the onset of COVID with market prices resetting. So some of those costs would have been more the one-time in nature and not recurring. So overall, some more costs to flow. We still are continuing with thank you pay to our employees, and so, but certainly much lower than what we've been incurring so far.
Okay, just moving on to the outlook. How do you feel about your inventory levels? Looks like about just under 90 million. Q2 a year ago was 120 million. How do you feel about the rebound in the second half, and maybe how should we think about the second half this year versus second half last year in terms of percentage change? Do you anticipate sort of being at 80% of last year or higher, or any sort of qualitative factor, outlook you can give us would be great.
Sure. I'll take that. So as I alluded to earlier, demand and sales continue to improve since the end of April. We've had a successful shift of sales to channels experiencing heightened demand, especially retail, but also e-commerce. And we're seeing improvement in traditional food service already as economies reopen around the world, and we do expect this trend to continue. Uncertainty persists, largely associated with countries making continued progress on reopening and economic recovery. But based on our customer demand and order patterns, we're cautiously optimistic, with some species having already fully allocated demand for the second half of the year. And we expect species with more traditional exposure to food service, like lobster, as an example, to be more impacted through the balance of the year. From an inventory standpoint, we have very good visibility to our order patterns and long customer histories and a very robust forecasting system, and we're procuring to demand. And, where we see, some potential anomalies from an inventory perspective, whether it's the end of a quarter or the end of a year, it's the phenomenon of timing of landings. The animals don't know when the quarter end happens, as you've heard me say before. So, any blips at the species level in inventories will be associated with timing of landings, not demand or procurement, but with our own harvest.
Right. And maybe a final question for you, just the end, your clients at the end of the day, whether they be distributors or, food service or whoever, how are they coming through this process? Are any of them in, trouble or financial trouble, or maybe just any clarity on that?
Sure.
Sorry, I would say it's, I think we've been very fortunate. Most of our customers are well financed and in great shape. Teresa can probably comment in further detail. We have had customers taking advantage of extended terms in terms of sales terms and days to pay, that we have extended them. And we've obviously been taking advantage of our great relationship and use of EDC insurance. Everything we do sell is 100% EDC insured, but we don't see any issues on the horizon relative to our core customer base, other than we know that we've had requests for dating because they're doing the same thing we're doing, which is preserving liquidity and cash.
I can't add anything more to that.
Okay, great. Thanks, everybody. Appreciate it.
Thanks, Doug.
Thank you very much. Thank you. Your next question comes from John Sars with Viking Capital Corp. Please go ahead.
Hi, guys.
Hi, John.
So I have a question about the strategic process, and I have to apologize ahead for the pun, the bad pun. But in view of the quotas are restricted to Canadian owners, and I'm just wondering, how far are you able to cast the net in terms of finding potential acquirers?
Yeah, so the ownership of the Canadian quotas are not restricted to Canadian buyers, but you have to have a 51% Canadian ownership component. You have to have foreign ownership can only be minority, and I think foreign interests would be aware of that. But I think there are a number of examples within Canada and globally where structures exist that would accommodate such an occurrence.
So are you currently exploring those types of? I guess do you have any? Are you dealing with clients or potential acquirers within that category?
Love to comment, but I can't.
Oh, okay. So my second question. Oh, sorry. Just one more question. A very short one. In terms of the somewhat tense political climate between Canada and China, has that have any impact on your business in China?
No.
Okay.
I think there's been impact on the seafood trade, in China associated with these outbreaks that have been connected to seafood processing. So there's been an impact more broadly on seafood, but there's been no specific impact that is directed at Clearwater.
Okay. Thanks.
Thanks, John.
Thank you very much. Your next question comes from Jonathan Lamel from BMO. Please go ahead.
Good afternoon. Hi. On COVID, Ian, apart from the seasonal shrimp processing operation, are there any cases in the operations you are monitoring?
There are no active cases in our operations, thankfully.
Great. On demand trends, would you happen to have any color on the decline in sales at the end of the quarter or quarter to date in Q3? I think the food service distributors are talking about things improving to the -20 to -25% range at the end of calendar Q2 and since, just in terms of their overall volumes. I was just wondering if that's consistent with the experience you've had.
Yeah, so I can't comment on a specific percentage, Jonathan, but what I can tell you is that the strength that we saw in our order patterns in the month of June continued into July and seems to be holding true in the month of August.
And can you just remind us, Ian, what visibility you would have to orders over the balance of Q3 and Q4 at this time of year? Which species would already be fully ordered?
Yeah, so I can't tell you that, but I can tell you that it's some of our major core species would be already on allocation through the balance of the year. We have a 12-month rolling forecast system. It goes quite deep. It goes by region. It goes by customer, regardless of what channel that they're in. And it gets repopulated every 2 weeks directly by our salespeople who are in the market, so are updating those forecasts. And it goes into detail all the way down to the SKU level. So it's quite a robust system, and it's really gives us the strength, gives me the confidence to make the forward-looking statements I'm making today about strength in the order patterns and allocations for certain species through the balance of the year.
Thanks. And you've seen quite a decline in demand volumes on certain major species like clams and shrimp. Would it make sense to cut prices to stimulate demand? How do you think about balancing those two?
So interestingly, great question. Prices, as I said earlier, were down single digits for the quarter and the first half of the year, although they improved in second quarter versus first quarter. And the prices were down single digit as a percent on lower demand and lower volume sales. So what we're seeing now, we saw in June, we continue to see in July and August, is that both sales revenue, sales volume, and prices are now steadily improving as we head into and get ready for our busiest sales period of the year, which starts really post-Labor Day. So no, the short answer is no. We don't see opportunity in reducing prices.
Okay, and just a quick question on the Q2 costs for Teresa. Are you able to help frame whether lower marine diesel fuel was a material benefit to the Q2 or should be for Q3?
So we are continuing to benefit from lower fuel costs. Q2, balance of the year, that's what we're expecting, yes.
Okay, thanks for your comments.
Thanks, Jonathan.
Thank you very much. Your next question comes from Justine O with Mesero Capital. Please go ahead.
Hi, sorry I missed it earlier, but can you, you mentioned that cash flow will be positive, but I wasn't sure if that you meant cash flow will be positive for the second half of 2020 or for the full year 2020? Free cash flow, sorry, free cash flow.
Free cash flow, so we heavier weight, our free cash flow is heavier weighted to the second half of the year. So my comment, Jean, was in reference to the total year, but that naturally means that it also is heavier in our second half.
Okay, so your comment was based on the full year free cash flow positive.
Yeah.
Gotcha. And do you define free cash flow as cash flow from operations minus CapEx?
That would be the largest bulk of it. And if you actually look in our financial statements, we do provide a definition of it there, so you can actually see a bridge in our MD&A as well.
Okay, great. Thank you.
Thank you very much. Ladies and gentlemen, as a reminder, should you have a question, please press the star followed by 1. Your next question comes from Jonathan Norwood from Viking Capital. Please go ahead.
Good afternoon, everybody. I just had a follow-up to my colleague John Sart's question with respect to the strategic review process. So maybe I'll try a little bit of a different tack. But so you mentioned there's kind of 3 steps to the process. First is to identify, second to review, and then third to evaluate. And so I think I asked you this on the call last quarter, Ian, and you had indicated, I had asked you which stage you were in, and I think you had indicated still the identifying stage. So can you tell us which stage you're in now?
Jonathan, I'd love to give you more information. As you can imagine, we anticipated this question. It was a matter of significant discussion with our special committee of our board and our capital advisors and legal advisors, and I cannot provide you with more information than I already have. Okay.
And just one additional question then. So, Teresa, it's been maybe 16 or 17 months since you had indicated that you would be stepping down as CFO, and obviously there hasn't been an appointment made in that regard. And so I'm just wondering, what's the timeline, I guess, for appointing a new CFO, and is it something that could potentially be part of the strategic review process? I'm just wondering if you could give us a little more color there.
So, Ian, do you want to talk there, or would you like me to talk to that?
I'm happy to talk to it, but I'm equally happy to let you answer the question.
Okay, there you go. So at this point, there's no specific timelines. I'm fully committed and engaged in seeing through and working with the company. So there are no specific plans in place at this time.
So
the only thing I would add to that is that the earlier announcement was based on lifestyle and life issues facing Teresa and her family, and we're very grateful to Teresa, who originally agreed to stay on through a transition process, and now with everything that's going on in the world, has made an open-ended commitment to us, and she's delightful to work with. She's doing an outstanding job, and we're going to continue to operate as a team going forward. And her commitment is now open-ended, which I'm grateful for.
Okay. So there's no active search then being undertaken for a new CFO?
Correct.
Okay, thanks.
You're welcome.
Thank you very much. Ian Smith, there are no further questions at this time. Please proceed.
Okay. Listen, thank you very much for all calling in today. I know it's the dead of summer, and hopefully some of you are calling in from the beach or the dock, and we'll let you get back to that. We really appreciate your time and attention today. And when we have more information to share with you, you can be sure that we will be reaching out. Thank you, and have a great afternoon.
Ladies and gentlemen, this concludes your conference call for today. We thank you for participating and ask that you please disconnect your lines. Thank you.
Good job.